Okay, so Evelyn, you want to touch on the your segment?
Yes, that's right. Okay, so we will do a summary. There's a lot to digest, so I will just do a summary. Generally, I just wanted to say that what PC has predicted is aligned to what the trend is here, and I can tell you that the worst has yet to come. Okay, the worst has yet to come, and this is not the worst yet. There might be a major reset also to set us into a new era, which we will follow up with another talk if there's enough interest. So here generally I just want to summarize that the sector that will receive attention is agriculture, logistics, maybe energy and technology, and we will also expect the global financial changes because the element of water, there's a lot of water there, and they're exposed because water for this year in the chart it means the wealth energy, okay, for the global. So there will be a lot of financial changes expected also from the outlook of year 2020. So and there will not be much of a there will be low productivity, no output, as just I say the chart, no metal. So no metal in terms of 5 elements means that no output. So you can see production has been cut down due to a lot of reasons, and people will also be more towards building fellowship in a lot of this. I think in the government itself also they are trying to have their own G8, right? Like PC has told me that these are all like a new kind of a fellowship. Okay, so I think PC, over to you for your summary section.
Yeah, so I think although the commodities have fallen somewhat, it is due to the expectation of the market that the Federal Reserve would be able to tame inflation. But if you look at it, if we want to measure the commodities in terms of euro and yen, they are actually still at very high levels, okay, because of the weakening currency value. So in US dollar, yes, it has come down somewhat, but that is based on the market expectation that the Federal Reserve would be able to tame inflation, causing a slight deflation. But it's no longer a slight deflation. It's already in a recession. Hiking further would cause a depression. So that's why I think they will not allow depression to take place, much less a recession, and therefore the central banks will do a U-turn in policy. And if they don't do that, there'll be depression and more people would lose their job. Right now, okay, very interestingly, the non-farm payrolls came out with a job gain of 300 over 1,000 jobs. But for one who actually dwells deeper, the job gains was actually due to people holding multiple jobs. But there were actually a fall in part-timers. There was actually a fall in the full-time workers. But there is a huge rise in multiple job holders. But the employment report like to measure it such that one job is equal to one employed person. So that's why when one person holds 2 jobs, it sees it at 2 persons being employed. That's why the unemployment rate is still seen as very low. But actually, a lot of people are holding 2 or even 3 jobs because they even have to work part-time during the weekends because the consumers have no more money because of inflation. They have to survive. Meeting life ends meet is their priority, and that means giving up their own precious time to find jobs to feed the family. And those who have,
this is actually in line with the future trend because the future era that we are entering into is fire period. So fire will burn non-stop. Then people, will work like non-stop also already.
Yeah. So that is why the central banks will do a U-turn. Now, once they do a U-turn, inflation will worsen. Inflation will crimp productivity as corporations worry about costs, and also they will crimp they will also crimp productivity because consumption will be less due to inflation. So when inflation consumption is less, corporations will have less incentive to invest in plant and equipment to improve productivity. So that's why it will be a period of low output. Now, the fellowship thing, you know, this year we are seeing the rise of the BRICS plus nations. They are now proposing to have a BRICS reserve currency backed by BRICS nation currencies. And on top of that, Russia and China is working with the Europe, EAEU, or Eurasian Economic Union, okay, to come up with a commodities-backed currency, which I think eventually will be merged with the BRICS monetary system. And that is not the end of it, okay? A lot of countries in Africa, Middle East are applying, and South America is applying to join the BRICS nations, okay? For example, Iran and Argentina will soon be joining BRICS, and Hungary, Bangladesh, Uruguay, as well as UAE have become new members of the BRICS New Development Bank. So you can see that, you know, people are grouping together. Then on the security side or military side of the fellowship, we see the introduction of the Pacific, of the Blue Pacific, okay, of nations that want to involving US, UK, Australia, and New Zealand to protect the South Pacific, because suddenly China signs an agreement with Solomon Islands, have some agreement with Fiji, Papua New Guinea. So then, you know, they are now going to build their own Blue Pacific nations. Of course, those islands, Pacific islands, have to listen to their dictator. Okay, so this is, now we are seeing emergence of all these blocks, and it will only complicate the global geopolitics, economy, and financial situation much worse. Okay, so that's all I have.
Yeah.
Questions and answers?
Yes,
you can type your question on the chat box.
Yeah. I think the fellowship thing is more like the Lord of the Rings, the fellowship of the Middle Kingdom.
So
okay.
It depends who is Sauron.
Yeah. So yeah. So any questions that we can help to answer?
You can
any one of you
in the chat box.
Let me check if the chat box has any questions or not. Participants have no questions.
Okay, when do I expect the Fed to do a U-turn? I think it depends on two very important factors here. Number one is how much pain can the US endure because recession is already in. And the last I read is that a lot of corporations in these earnings seasons are going to announce job cuts. So if the job cuts is very significant, unemployment claims goes up, and then there's adjustment to the employment report further down the road that will show unemployment ticking up, then the Fed mandate will be breached because it's to maximize employment, part of its mandate. But the Fed's other mandate is actually to ensure stable prices. So the Fed actually have to choose either one. It cannot do both. Now, the other thing is that the strength in the US dollar is creating a dollar liquidity problem, very similar to the 2019 repo crisis, where there is a shortage of US dollar in the market and no banks want to lend money to each other, causing the overnight repo rate to go as high as 10% for a single day of repo. So if this dollar liquidity crisis plus the recession risk and the Fed still continue to hike, then we will see a lot of banks facing financial stress, because outside of the US, where they have these trillions of debt and all those, in the euro dollar market, which means US dollar that are held outside of the US, there are 33 trillion in assets. Now, this 33 trillion of euro dollar are lent to emerging markets in exchange for the European banks holding their bonds. Now, if let's say US dollar spikes up, the emerging economies that borrow from the euro dollar market will have to pay a much higher debt service because interest rate may remain the same, but then their currency has devalued against the US dollar. So what happened is then they will default on the bonds. If let's say they default on the bonds, then the euro dollar market, which consists of $33 trillion, would actually be at risk. So once this is at risk, the globally systematically important banks or the G-SIBs will be in trouble because as the value of the bonds decrease, then their assets that they hold will also decrease. So if assets decrease at a faster rate while their liabilities increase, then we could see the G-SIB at risk. And if let's say one G-SIB fall, all it needs is just one G-SIB, okay? One systematically important bank to collapse, then it will spread across the entire banking system because they are all connected to each other via counterparty risk and through derivatives. So that is whether the Fed will allow that to happen. Because if they allow that to happen, which means US banks will also be put at risk, although US banks are actually in much stronger foundation versus the European banks. So I think all this we will know within months. Okay, no need to wait until next year because a lot of economists are predicting, okay, you know, there'll be inflation, then deflation, and then the economy can recover. No, it won't happen.
I don't think it will recover this year because from even the Chinese astrology standpoint, productivity will definitely be low. That means the industries are not this one. So the employment rate is going to be quite high. And I don't think there is a much of a U-turn. It doesn't look optimistic, at least for this second half of the year. The first half is still okay from the chart analysis, but the second half all gone, all this one. So with this knowledge also, I personally has also, you know, exceed some of my position in the stocks itself, even before the second half comes in with that knowledge I have.
Yeah, so David has a very interesting question. Now, I think that is why the central banks would actually have to buy up, okay, like Japan, yeah, they have to buy up the bonds, and ECB also have to buy up the bonds, okay. But one interesting thing is that there are signs now showing that some of the central banks' total equity is actually negative because the bonds have all collapsed in value, okay. That so much so that their assets are now less than their liability. But central banks, you know, they are not like a commercial bank, okay. The profit and loss, you know, is not the most important issue. But one thing that the central bank has is that they do carry gold reserves. One of the way which central banks can actually rebalance back their assets, okay, is to revalue gold to a much higher price to actually balance back their assets, okay. The whole thing is that central banks, even though they are negative equity, it doesn't place them at a very, very huge risk because they can always recapitalize it, you know, back to money printing, or they can revalue the other asset that they hold, which is gold, into a much higher value, so that it helps to ease off, okay, a lot of the government debts and so forth. So it's actually up to the central bank which direction they want to go. Okay, hope that answers your question.
Okay. Probably if there's a revalue in gold, it will happen sometime end of the year because there is some indication of it.
Yeah, I also hope so too. You know, but,
yeah,
but I think that the danger is that the there are too many connected derivatives among all the banks. And some economists estimated, that if we were to take into all the global debt, all the global derivatives, whether reported or unreported, and total unfunded liabilities, it comes to an astounding 2.5 quadrillion. Okay, 2.5 quadrillion is a huge amount of money. So a lot of times, banks themselves, they will say that, hey, it doesn't matter my derivative exposure because I have if this one goes up, okay, that one will come down, and net off the amount is not great. Yes, it's true. Okay, because the financial derivatives can actually net off each other, and the loss may not be as big. It won't be a total 2.5 quadrillion loss. But the thing is, just like the repo crisis, when banks have no trust of the other, that means there's a failure in the netting off of financial derivatives. Okay, if let's say there's a failure when banks do not trust each other, then there's no netting off. People just would not trust each other, and that's when the counterparty risk will explode. Okay, so that is the danger. And a lot of the commercial banks actually underreported their financial derivatives, and most of them just put a net figure, okay, that is much smaller. But if banks started to distrust each other, then it will be a situation much worse than the Lehman crisis, because Lehman crisis was that all the commercial banks refused to trust Lehman's creditworthiness. Okay.
Okay.
Any questions? So, David, does that answer your question? So far in Asia, I've not read about it. Okay, but in the US and the EU, Ivan's question is that the money we keep in the bank. But in the EU and in the US, there is a specific clause that spells out depositors will also be the creditors if a bank fails. Okay, which means the depositors' money will be used to bail out the bank. And then what they get will be the bank's shares in return. We have seen that in Cyprus, okay? And it happened in Cyprus during the European debt crisis. So, and it's already spelled out in the EU banks as well as in the US banks. But Malaysia banks, I've not read any article that touch on this. So, so far, a lot of Malaysian banks, they say that up to a certain amount, okay, you are insured. Okay, so for those who are very rich, okay, because the insured, I think it's up to, 250,000 or something like that. So you better spread it up across multiple banks, because those above 250,000, whatever the difference, could wind up building the bank. But I think in Asia, the banks are less at risk, okay? Because when I look at the G6, most of the banks that are counterparty to each other are actually Europe, US, Japan, and China. Okay. So these banks would be more at risk, okay, because especially China, the world top 10 banks in terms of asset quality, China actually has the most banks. So that is somewhat a risk factor, okay, when the counterparty risk starts failing. So I think that's why the China started to deflate the property bubble last year, so that it wants to prevent a potential collapse when other countries start collapsing.
Okay, if you really have the money and don't mind and you feel that really is not secure, I think Singapore will be a best place. Singapore banks are very secure. Yeah, from the standpoint of the astrology in terms of, in the region of growth and stability, Singapore's will be a place where you can keep some of your money, and I think the currency will also be quite stable.
Yeah, I think if you want to compare Singapore dollar with Malaysia, I think a few times Singaporeans actually rush to exchange their money to Malaysian ringgit whenever they see a sharp fall. I think best to avoid it for the time being, because I saw the same thing, Singaporean rushing to exchange for ringgit when it was 2.88, then again when it was 2.10, right now it's closer to 3.2, 3.1, right now it's closer to 3.2. If we study the core relationship of the relationship between Sing dollar and Malaysia ringgit, going all the way back to before the, I studied in Singapore up to graduation, and then I left Malaysia for Singapore. I left Singapore for Malaysia, returned back after I fulfilled my bond to serve in the to serve in the commercial sector for 3 years. At that time, when I was studying, the exchange rate was 1.2 ringgit to Sing dollar in 1985. But during that period, we have seen a period of recession. So when I left Singapore in 1993, it was 1.5. Then subsequently, we have the Asian financial crisis, which saw the exchange rate from ringgit to Singapore dollar becomes 2.2. Then we have the dot-com bubble, and then we saw it rising to 2.3. And after that, we have the global financial crisis. We see it touching about 2.4 to 2.5. So right now, after the pandemic, it's 3.1 to 3.2. So every time after a recession, Malaysia ringgit will actually fall further behind Singapore dollar. So if, let's say, if you are a Singaporean, I think the Sing dollar commands a lot of respect, and also because people, like Malaysia like to say, hey, our debt to GDP, government debt to GDP is 65%, but actually foreign analysts put it at 73% because of governments being guarantor for GLCs in Malaysia. Okay, but then they say compared to Singapore government debt to GDP is more than 100%. But actually, the Singapore reserve to GDP is very much higher than Malaysia. Okay, and because Singapore government managed the Sing dollar such that when economy is inflationary, they allow the Sing dollar to appreciate. That's why you see Sing dollar appreciating so much. Instead of keep on raising interest rate, because the Singapore government will not do that, because a lot of the people use their income and CPF to buy property. And if, let's say, they increase the interest rate, then a lot of the citizens would really, really feel the pinch. So they allow the Sing dollar to appreciate so that the inflation pressure is kept low. When the economy is in the doldrums, they allow the Sing dollar to weaken so that it's, help to support the economy. So in that sense, it has lesser to do with interest rate. So that is why I think Singapore dollar does command a lot of respect. And I think if you hold on to it, you for longer term, you might be able to exchange much better, whenever you want to travel overseas and such. Yeah. So next question. Does it mean that the amount of government or central banks debt is not too concerning as long as they continue to issue bonds to pay for their expenses? When will Greece actually goes into insolvency like Sri Lanka without anyone willing to bail it out? Well, I think the ECB is willing to bail out all the PIGS nation, okay, which means Portugal, Ireland, Italy, Greece, and Spain, because they are the weakest. ECB already shown their commitment to bail it out, okay? And central bank will continue to print. They would rather save the economy than the inflation, okay? Why? Because if the economy continues to suffer, the central banks will all lose their jobs. Okay, the people will force the government to kick out the central bank. And central bank is actually a private entity. Okay, and if you Google the Rothschilds central bank, it's like all the central banks in the world is, you know, is tied to the Rothschilds family. Okay, so it's a long history. If you want to study, you can go to YouTube, you know, and listen to the story about the Rothschilds, how they started from a bank in Germany. Then
maybe from Middle Ages could be.
Yeah, it dates back very long. In fact, during the Napoleonic War, the Rothschild Bank in France is supporting the Rothschild, the Napoleon, while the Rothschild Bank in England was supporting Duke of Wellington. So at the end of the day, you know, they know what's happening. Okay, then they bet on the losing side. Against the losing side, a bet on the winning side. So that's how they make money. And in fact, Nathaniel Rothschild, I think, did say, I care not who is the government as long as I have the power to print the money, you know, something like that. Okay, so that's why the central bank would want to ensure at least there's a reason for them to continue being there, and that's why they would rather hyperinflate than to destroy the economy, because then their existence will be challenged. Okay, so that's what I think they will continue to do so. So next question, is commodity bull run super cycle still intact? Okay, I think recently there's one, for those who actually follow the cryptocurrency market, you might have heard of one economist called Raoul Pal. Raoul Pal is in one of his interview actually mentioned he's buying US treasuries because for short term definitely, or not so short term, short to medium term, because he's saying that the Fed will pivot, and when they pivot, treasury would rise, and the Fed will have to do even a much higher QE, okay, to actually do a much higher QE to sustain the spending, and that's when treasury will continue to appreciate, and that would give him time to actually buy now, sell later, then sweep all, you know, sell off the treasury to invest in all the beaten down stocks. So that, and also in some cryptos, which we think has fallen in tandem with the NASDAQ. So if the Fed pivots, then NASDAQ will actually reverse to the upside, and that is when cryptocurrency would likely follow the same trade, because the trend between the NASDAQ and the cryptocurrency market, you know, both have also declined. So that goes to show that cryptocurrencies have not yet fulfilled the inspiration of being a digital gold as yet. Yeah. So in that sense, I think once the Fed pivot, there will be a super bull run, okay, in commodity cycle, in the commodity sphere, because once it's pivot, US dollar will come down. And this time, because of the recession is going to be much worse. Even during the pandemic, consumer sentiment have not reached a record low. Right now, it has reached a record low. Not only that, small businesses are reaching a record low. Okay, and as I mentioned, the cancellation of pending home sales, you know, has spiked up to, you know, in the last few years, you know, just second only to the pandemic. And if let's say it goes higher because of higher interest rate, then definitely it's going to be a much worse situation than the pandemic. So US inflation will be peaked by year end. A lot of people were saying this, but like I say, you know, during the 1970s, Fed hike interest rate, inflation came down, then there's a recession, they ease, and then inflation shot up much higher. So if you follow, in fact, the inflation in US is being manipulated. Few things that is not being discussed, okay? First and foremost is that the BLS actually changed the criteria for housing. Last time they used housing as an as a form of inflation, but housing has already gained so many hundreds of percent all through the years, so they would rather not. So they use their own modeling of using rent instead. So every time they use rent, they try to keep it down, okay, by putting a hypothetical figure. They put rent at about, I think the last time it showed about 6%, but at the same time, according to the Zamper rental chart, it shows that within 1 year, rental has actually gone up between 11 to 12%. But in the BLS, it put rental inflation at 6%. So it's actually reducing it. Why? Because the Federal Reserve core CPI, rent as a percentage of the core CPI is 40%. So if they allow that double digit to be in, the core CPI would shoot up. So the Fed would often weigh the GDP, the real GDP growth, by netting off against the core CPI. Lower the core CPI, higher the GDP. So that is how they want to manipulate it, so that GDP looks better. The net GDP, the real GDP looks better by controlling inflation. And another thing is that automobiles, for many years, they have not allowed automobile to show any inflation, because the Fed says that, hey, the inflation, there's no inflation in automobiles. Why? Because now every car got aircon, have heater, have audio. Previously, they don't have. So they equate with higher price due to improved quality, and therefore there's no inflation. And another thing that the Fed never take into account is shrinkflation, because what happened over the last 2 years is that retailers found out that if they keep on increasing price, it will actually affect their revenue, because people refuse to pay. So what they do, they shrink the size down by 20%, so that people have to pay double to feed the family. Okay, instead of previously they buy 1 packet, now they have to buy 2 packets to help offset their to help match back their consumption. So this inflation did not take into account any shrinkflation. And the other incentive for the Fed to keep the inflation low is because Social Security. Now, if inflation is high, the Fed need to adjust the Social Security payment in accordance to the inflation. But if, let's say, inflation is kept low, that adjustment is smaller. And we all know that the US has no money, because all Social Security payment has to be financed by debt. And that is why there's every incentive for the Fed to manipulate the CPI and core CPI. Now, if you want to go back to check, were the Fed to continue using the same metrics that in 1980 was used when inflation was 13%, you go to shadowstats.com. Okay, John Williams there would tell you how inflation have changed and what is the real inflation is. If we use back the same metrics of 1980, inflation right now is at 15 to 18%. So that's why by changing the metrics, the Fed has, saying
the method of measurement.
Yeah, it's 8.6%, but actual fact is about 15 to 18%. So that's why I think inflation has more room to go, because you are talking about 30 trillion being, expanded into the monetary system, and that 30 trillion has still to be played out, okay, in a global inflationary crisis. So several experts speculate that S&P can drop as much as 50% from the peak. What is your view? Yes, I think, I've read about Michael Burry's works. He said that we are only halfway there. And just yesterday, I saw another economist predicting we are also halfway there. Now, what the market has not priced in yet, right now the market is pricing in that every piece of bad news is good news, because it means that the Fed cannot raise interest rate higher, and therefore they have to pivot, and therefore the stock market will recover. But one thing they have not taken into consideration is earning recession. Now, what do I mean by earning recession? The strong US dollar will cause a massive earning recession in US multinationals, because weakening foreign currencies against the US dollar, when reported back in US dollar, in their earnings, it will show a decline. especially if, let's say, we talk about ringgit maybe have depreciated almost 10% versus the US dollar, then this kind of thing is translated into the US dollar, you will see that decline, okay, in terms of earnings in US dollar. And once they price in the earnings recession, then the S&P would take a further step down. Now, if let's say the Fed this month decides to put in 0.75% in interest rate increase, then the S&P would likely take another leg down, okay? And at 0.75%, you will see probably a lot of default hitting the US corporation, because a lot of them, as early as the start of 2021, more than 50% of US corporations that are considered junk. BlackRock actually did a calculation, okay? If I remember correctly, it was 56% at the start of 2021. 56% of US corporation debt is actually junk. Right now, with much higher yield, I can tell you it's definitely more than 56%. So if let's say we add another 0.75%, a lot of the US corporations will go into default. And when there is a default, it poses a risk to the banking system. Suddenly, you know what, if 80% of the US corporations tend to default, and if let's say they do not default, assuming because of that high interest rate, their earnings is being impacted not only through a much higher exchange rate, a much weaker foreign currency converted to US dollar, lower earnings, but also higher interest being paid to refinance debt which were borrowed at low interest rate. So that means that, you know, earning recession is not only one effect, it's a double effect, okay? So if that happens, okay, then the measurement of the PE for the S&P would drop, okay? And if let's say corporations really will default, it will drop further. So that is the rationale behind why economists predict that we are nowhere near the bottom yet. Goldman Sachs, I think 2 months ago, or just last month, put the target at 3150 for the S&P before they see something that will force the Fed to pivot. So far, the S&P has dropped about halfway through, okay? And that means that we have another 25% or so to go. But the danger is that when everything starts collapsing, it can go down by as much as 80%. And such thing had happened before. Now, during the Great Depression, the Dow Industrial actually fell 90%. So next question, time to buy China tech stocks while having
okay, I would like to add a little bit about this. As stated, from the astrology standpoint, so the worst has yet to come. So we are really confirm your prediction that we are just halfway through. And plus, we say that this year no productivity low. That means a lot of corporation will have problem already. Once where they get the profit from is from productivity, right? So it will eat into their profits also.
Yeah, time to buy China tech stocks while pending US recession. I think China has still not got rid itself as being independent from what is happening in the US. And Chinese tech stocks are showing, they are showing much better resilience, okay, compared to the to some of the tech stocks. Now, the other thing is that China just injected, I think, more than 1 trillion renminbi into the economy, okay, and that would help provide at least some support. But the thing is that Chinese tech stocks right now is also burdened by one very important thing, the shortage of chips. That is why a lot of the chip makers and such, they are, for example, those in the gadget industry, they are facing pressure because they have the demand, but there's not enough chips. And furthermore, US is trying to put more pressure on the Chinese tech sector by saying that they will even, force Netherlands to stop, to disallow ASML to sell the DUV machine. First it was EUV, now they say they want to include DUV. Why? Because the Chinese technicians have successfully used DUV to improve the processors or the stacking to actually improve the chip's performance. So right now they want to include DUV. Now I think the part where China will finally break off is going to be over the next 2 years, okay? Because right now the only lithography machine maker in China is Shanghai Microelectronics. So far they have able to bring it down to 90 nanometer. They are now trying to get into 28 nanometer, and they still have not been able to be very successful in it. But I think given time, they might be able to reduce it to 28. Most of the technology that China, even AI and all these, 14 to 28 nanometer is enough, okay? And if, let's say, one thing that would level the playing ground is that when Russia secures Odessa, that means that Russia is going to be the one that controls the neon gas. And China is reported to be developing their own neon gas plant. Now, neon gas doesn't exist in the environment where you just harvest, okay? Neon gas can only be done when you have a gigantic steel mill. So China has a lot of this, okay? And there are reports that China is going to start up with their steel mills. The US, okay, and the Japan have already outsourced a lot of their steel production to China. So that means that they don't have that capacity to manufacture so much on their own. So if, let's say, Russia controls the neon gas through Ukraine and China is building their own, it becomes a stalemate. You don't sell me the DUV or the EUV, I won't supply to you any neon gas.
Yeah.
So that means that TSMC will be in trouble, NVIDIA will be in trouble, NVIDIA will be in trouble,
yes.
All these microchips producers will be in trouble.
That's why your stock drops.
Yeah, so that's why I was saying that even NVIDIA is a very good stock, but you should not go into it even though the value has fallen, because we need to see the outcome of whether Russia will take Odessa and hold it and negotiate to lift of sanction and allow the neon gas to be sold, because otherwise everyone doesn't have any chips, because the neon gas that is in the market is reported to last only about 12 months.
Yeah, another thing about China high-tech stock, actually for the past, I think 5 to 10 years, the Chinese government wants to develop the China technology ecosystem, what they call that, to be, to manufacture high-tech products like LCD. They have overtake Korean and Japanese to become the largest LCD suppliers, like Panda and BOE, but their technology is still depends very much on Korean and Japanese technology. And some of the IP properties of the chip making, I think China has not really mastered it. And also US is like, trying to stop China from advancing into this area. Yeah. Because they're afraid that it will be something like the LCD type. Because I've been in I'm in the consumer electronics industries and the supply chain for over 30 years. So I know what is going on in China, and also, working very closely with China high-tech companies, even like batteries, BODC, CATL, and all these things.
Yeah, I think the thing is that for one thing is that China is going to have is already revising all their EVs rules. Okay, right now they want to open up more the EV, and they are going to continue subsidizing the EV until 2023. So that's why a lot of EV companies see a reversal, where sales actually increased by up to more than 100% in the month of June because of that change of policy. So I think beaten down Chinese EV stocks can be monitored, because I think no matter what, they still tend to follow the Nasdaq. Okay, even though their revenue may show improvement and such. So I think the period of accumulation should be on a gradual basis if you have confidence in the EV market. And because I think come 2025, okay, a lot of objectives would have been met. So there is also the talk that the development of graphene has yet to mature. Okay, I think although Huawei has patent to use graphene chips, but the challenging thing is that how to put that chip into the electronics themselves and ensure good performance, because right now it has only been tried as a capacitor in terms of resistors, if I'm not wrong, and it has not even gone into the proper chip making. So unless that could be changed, then if let's say China is Huawei, able to change the fate of the Chinese chips industry by pushing forward its graphene tech, then China doesn't need any DUV, doesn't need any EUV, okay, because graphene will totally revolutionize the industry. And then China has the world's largest reserve of graphene.
Yes, and also another thing is that there should be a breakthrough in the design of the printer board circuitry, because right now all the printer board circuits are designed around the silicon chips functions and how the algorithm.
Yeah. So that is how China can break away, because if China is able to break away with a new tech, I think China would not be interested in compete. That's why China is not even concerned when they want to achieve 2 nanometer, because there's this thing called the Moore's law, where the more you shrink it, okay, the less efficient it becomes, okay, because of the heat generating, because you are putting so many circuits in a small chip.
Micro circuits.
The heat that is generated will actually make the performance of that jet very deficient.
Yeah. And also the yield of the manufacturing will be very low already, because when you handle so many micro circuits in a manufacturing environment, in this manufacturing environment, it will be very, very challenging.
Then I read a paper from 2 professors who are actually from Europe, if I'm not wrong, that they say that with the introduction of supercomputer or quantum computer, eventually, and also the improvement in quantum communication or even 6G, okay, we can actually transfer the performance of a smartphone from having to do so much processing that processing can be done by a supercomputer. And because of 6G or quantum communication, the release of the data will be very seamless. Okay, so they have come up with that theory. So that is shifting the processing power of a smartphone, where you require a very, very high performance chip, back to the supercomputer, which can actually function much faster. Okay, and then through 6G or quantum communication, release back data back to the phone very, very fast. So that's one way also to bypass, needing very, very efficient chips. So those professors have brought about this theory. So whether it will work or not, we do not know. But I think that is why I think China is moving towards quantum communication. They already sent up a quantum satellite. They have also China has also issued out already started on 6G, and it's 100 times faster than 5G. Okay.
Yeah. Okay. So to buy high-tech China stocks will very much depend on this factor already. This development has to be closely monitor in order to know that. I think these two are very closely related. I think we should answer the last question from Ivan Tan, and then we'll call it a day, and we'll talk. Then maybe we can talk to our participant about joining us on our next upcoming talks.
Sure. So commodity price will fall further. Yes, if the Fed continue to hike, stronger US dollar will also show a further deterioration in the price. Okay, but I think in terms of palm oil and gold, here's my here's my opinion. There is a global food crisis. No matter how we see it, okay, there is not enough food for the whole world. And palm oil will strengthen when suddenly every country becomes very defensive, okay, that they want to stock up their own edible oils and such. So if let's say there's a shortage, then the price of palm oil would likely go up. I think gold has been under attack because the central banks wants to own gold, and that's why they are using the COMEX to manipulate the price lower. Okay, and if let's say why, you have to ask yourself why the central banks want to own gold. Why are they manipulating it lower? Because they do not want investors to own gold. Once they own as much gold as possible, when they do that monetary reset using gold to recapitalize the central banks, to recapitalize the economy, then common people will have no access to gold. It will become too expensive already. So right now, there is a severe shortage in gold. It's just that they do not want people to fight for the physical gold, because China is world #1 gold producer, Russia is #2. Both are not selling their gold. Okay, that means there is a shortage, and central banks are actually lapping it all up. And there's a report from Alistair McLeod that reported more than 8 million ounces of gold has been deported from the Bank of England. That means that smart officers, which means the family fortune companies, those that they inherit, the wealth that they inherit from their ancestors, family officers, and also the central banks, they are moving the gold out of Bank of England. Why? Because when there's not enough gold, suddenly Bank of England doesn't want to allow the removal of gold from their vault because they want to bail out their own Bank of England. They want to bail out the whole UK economy. Then you will have no access to your gold. And so that's why people are rushing in to repatriate the gold out of New York as well as from the Bank of England. This is telling you that the very super elite wealthy families and central banks, they know what is up. So the only way they do not want common people to fight with them to have gold is to bring the price down so that you have loss of confidence in gold. But if you look at it, how gold has performed, okay, gold has fallen maybe about more than 10%, but the S&P has fallen more than 25%, okay? So that goes to show that gold is still a good store value, okay, versus Bitcoin. Bitcoin has fallen about 68% since its peak. So this is the reason why if you think that you need a good store of value or as a form of insurance, whether it's a form of a reset or falling a financial reset and all those, then I think gold and silver, physical gold and silver would be the best store of value. Okay, so maybe we'll meet with each other again in the coming series.
Okay, yeah, and also do follow us on our YouTube channel, which I put the link here, and also the Facebook link of PC's page in the Facebook itself. One thing about gold is that it's always an evergreen commodity to keep. Okay, no matter what time they are, which era you are in. Okay, yeah, I think we will have a next talk in end of this month, which is 27th of July. Do join us. It's also on Wednesday, 11 a.m., which we will talk about what the August brings. Because August, from the chart, the astrology chart itself, brings a very challenging times. It shows that the clash in August bringing about potential global reset at this point of the time. This is why I say the worst has yet to come. We do watch out for us there, and we also will send out, communication flyers on this talk and also the registration link for the upcoming talk. Thank you. Thank you for attending the talk.
Okay, thank you. Bye-bye.